Good morning, everyone, and welcome to the On Time, On Target morning brief where we invest with military precision. Thank you for bringing your ideas to the table. You're going to get the best of my ideas today as well. If you are listening to this on a recording or checking us out for the first time, thanks for stopping by. If you want to join us, more information available at ototnow.com, and you just reach out to me. I'll give you a free trial. You can check it out. Basically, we bring a bunch of good ideas together from a bunch of smart people. We figure out some long-term investing stuff and some short-term investing stuff. And the biggest benefit for you is you get to basically ask whatever you want as far as a question. It doesn't have to be related to today. It could be anything that's on your mind. So ask away. We've got an hour. I'll answer that. And if you don't have questions and I have questions that I'll answer for you at the end of the day. So with that, let's go ahead and get started. If you're in the room, we use a call sign. It is anonymous. I don't care who you are, and just ask your questions and we will all get smarter for it. The rest of it is a fighter pilot briefing. So let's go. Mission objectives today are to grow our money, protect our money, and live off our money. Out of those three mission objectives, the one we're specifically going to break into tactically today is how to grow our money. Because we're talking tech names, we're talking chip makers is going to be our long-term focus. And then once we get out of the investing day trading mode and we move on to the question of the day, I'm going to answer, should I refinance my house? If you have, you may want to look at it again. There's all kinds of things to think about. I will go into depth about debt versus leverage and the differences, i.e. there isn't much. So how to think of those things so you're doing the smart moves with your money. From there, for our flow of the whole brief for the hour long, we're going to go long, short, open, short, long, which means we're going to talk about 10 minutes up front, doing an around the world review of the markets as to what's going on. We'll look at the headline review of today, including the jobs number that's out and other stocks that are moving of the market. We'll go into our 6 long-term names, 5 of which are chip makers. And then the 6th one is that index fund. For my index only folks, I have an option for you as well. We will go in within 10 minutes of the open. We are going to put our day trading hats on. We are going to dive in. We've got several names ready under the hammer for you as far as what you want to try to take a look at for long or short day trades. We will let the market open. We will resolve those trades, whether you take them with real money, paper money, or you just follow along. We'll basically bring those to conclusion. We'll go back to long-term investing, see how our big names are doing out there today, and then finally we will end with some academic work. For contingencies, if you're having any issues out there, go to steve@ototnow.com. That is monitored real time by my staff, and we'll be able to get you set straight. And lastly, the standard disclaimer applies. This is a financial education briefing, so you have to do your own due diligence for acting on anything you hear in this presentation. And with that, let's go up to the big board at TD Ameritrade. This is the ThinkPipes platform that's out there. This is the professional investor side of Think or Swim. The chart you're looking at is a 1-year SPY, which is the S&P 500, ticker SPY. And you can see, you know how it's been. People are still trying to say, is this going to be a V recovery? Every damn day I hear that. I love it. I don't know what else it could be, but people are making arguments. That's another letter out there. But when you really look at the past 2 weeks of trading, look at that. We've had a red day because the Big Ten doesn't want to play football. Literally, that was the headline that brought the market down on the day before last when the Big Ten and Pac-12 decided they were going to not play. Everybody else held strong, so it was kind of a hold your breath moment because it's easy to follow along when somebody goes the safe route. I've seen this a million times in the flying community. Somebody plays it safe, and all of a sudden you're the bad guy if you decide to just continue doing what you have always been doing for like 100 years. Now you are all of a sudden Mr. Risk and get a bad name. But some other leagues are pressing on. We don't know how that will all work out. I'm thinking it will probably work out just fine. But I do think that 2 football seasons, one in the spring and then turn around and do it again in the fall, is just a terrible idea. I think canceling would have been a better idea, but they can't because of revenue, and I get that too. But back to the market that's into green. Did we get good news today already? Yes, there's good news flowing into the market, even after yesterday's big green day. Let's look at the Qs, which is the NASDAQ, which had 3 down days. And then guess what tech does when it decides to come back? It comes back in a big way. So almost retraces those entire 3 down days we've had in the NASDAQ. So do I lay at night worried about tech? No, I do not. It does move. It's the biggest coaster out there. So if you can get yourself to ride that coaster, you will benefit from it long term. However, in the short term, you can be in the house of pain. Things move 5-10% on a day. Once you kind of shake that off and become one with that, then you're going to make a lot of money over the long term, but not for everybody. Let's go back to the SPY, and then we were going to zoom in on the last 5 days. We kind of talked about how everything has been in a straight line up, except for, colleges are canceling sports, which obviously has a lot of people out there. If you do end up postponing or canceling your moneymaker, i.e. college football, how are our professors out there going to make $200,000 a year for teaching an online class? I don't know how you pay those bills, but it's also not my problem. And I don't know how we got to that situation in the first place where those folks are commanding, congressional level salaries out there. So a lot of things are going to change in higher education, and I'm just going to stand by, look for the fallout, and see how we can profit from it through investing. You did see this morning, we've had that the good jobs number took us up, kind of selling right back off. We are literally, that's why I show the short-term stuff. We've come so far in like the past 10 days. And if you mention a name like Apple, I saw it this morning, I don't remember the exact number. Apple's up like 35% in the past 30 days. So yeah, okay, so let's maybe not always assume it's going to the moon, right? That's kind of crazy, even though they had a great announcement this morning. So we shall see. Tesla, obviously, it's blowing through the roof. The valuation is completely, it went from ridiculous to ridiculouser. That's intentional, misuse of a word, but it is ridiculouser than it ever has been before today. All right, let's take a look at the earnings calendar. This morning we had some names out, not necessarily household names. It starts with last night with YY, which is Joy, which is a tech company out of China. I could go into more detail, but you don't want that. They're up big off of crushing earnings. We also had FUTU beat some earnings. As far as an earnings miss, Cisco, big name out there, computer company, not the food company, but the CSCO is the one that they beat earnings and revenue, but they guided down, or they beat earnings and missed revenue and guided down. So they're getting hit this morning. We will take a look at them in a day trade. All right, that's about it for earnings. And then again, tomorrow will be quiet. Speaking of tomorrow, we're not going to be here tomorrow. So no morning brief tomorrow. Sleep in, enjoy your time. Hopefully today's a nice green day and you can sit back and wake up late and just count your money tomorrow. Okay, as far as the headlines, we're going to come down to CNBC and take a look at around the world, starting with our own futures. Barely in the green there, but hey, that's better than in the red. And actually the NASDAQ's up 0.5%. So not bad, not a bad way to start. Checking out the Asia markets, kind of mixed across the board. Japan up nicely, over to Europe. Down across the board, Europe's been on fire. It says trades lower ahead of jobless claims. Well, jobless claims are out. We'll talk about them in a minute. So clearly, they would have already recovered if that headline were true, and headlines aren't always true. All right, let's move over to our numbers from yesterday. There's the VIX hanging out around 22. I am long the VIX. I'm in it. It's not going to stay down here at 22 forever. I could be wrong for another day, week, hopefully not a month, but could be. But volatility is going higher. If you see VXX show up in your portfolio, that's not right for everybody. But if I do have aggressive investors out there, you can go long the VIX. It does move. It can be painful, but hang with it. Volatility is not going to stay at 22 through a national election. But those are obviously big numbers from yesterday, except for, you see small caps. We don't talk about the Russell 2K too much, but remember, that's the small caps that are out there. They can act separate from the market. So why would the small caps be being held back in this environment? Stimulus, the second round of stimulus is kind of hanging out, delaying, and the market going higher means that people aren't necessarily thinking that they have to make a second one. So political pandering, the blah, 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 all that continues. Well, guess what? Your smaller companies, which have taken the brunt of this COVID thing and the government's reaction to it, kind of been held back. So there will be a time to switch back into short-term names, or small names eventually. All right, let's check out bonds. We are going to talk about refinancing later today, which is loosely tied to the bond market, but 0.683, that's actually, even though it's in the red there, just a fraction. That's pretty high compared to where it's been. It was down below 0.6 for a while. All right, over to oil. Stabilizing nicely up north of 42.50 for a few days now. You got to like that. Over into gold. Silver, again, had that like 13% sell-off, so it's bouncing a little bit. All in all, where am I on the precious metals? The money's been made. I wouldn't stab money into them now. I mean, you could, but realistically, what are you going to get? If you buy a bunch of gold, it might move over 2,000. It's better to buy the VIX. The VIX is going to shoot higher. So that's my opinion. All right, let's go back to the main page and we will take a look at the headlines. So we will scroll down and see what these, that's basically, there's our jobless numbers. First time below 1 million jobless claims since basically the heart of COVID. That's a good thing, even though obviously that's a big number. But people are reinventing, pivoting, rediscovering. All of that stuff is going on. Bad companies are not bad. Affected companies are going under, and other companies are popping up. And Amazon's hiring. So people are just kind of making the best of it and making it work. All right, Tesla's up again. We talked about that. Maybe an S&P 500 record today. It's kind of ridiculous, but when markets get near a record, everybody gets giddy, and the market generally beats the record. So we shall see. All right. Yeah, there you go. This has been talked about for a while as far as the coronavirus data thrown into question. I have a good friend that's a pharmacist, and he's been poking holes in the whole the data from day one. So maybe it's not as bad as it was, or maybe it was never as bad as it was. So yeah, I mean, people are getting sick, there's no doubt. But as far as just the mortality rates and what everybody's making of it, we don't know. Stay tuned. If it goes away on November 3rd, regardless of whoever wins, then we will know that it was actually just a political football for the entirety of 2020, albeit an expensive one. So let's not do that again. All right, Peloton, this is an interesting one. Yeah, Peloton shares slip, so let's put them on our short list. Sweet. Put it also again on our short list with a check mark and a gold star, because Apple came out this morning with, I'm blanking on the name, I think it's Apple One, is a new subscription service that they're offering out there. It's now bundling all the nitnoid stuff that I pay Apple already, because I'm part of the iSheep. I held out for a long time. Now I'm all in, and guess what? Everything just works. So I'm pretty happy about that. But I do pay Apple a lot of money, and I really can't even account for all of that I do pay them. It just works that way. And now I have an Apple credit card, so it's like I'm really in the ecosystem. If they open up a brokerage account and allow me to take my businesses to like Apple brokerage, I will do that, and then I will be completely into the cult. But they have a subscription service now. You can bundle games, music, iCloud stuff, and how Peloton is being affected is Apple is basically going to stream fitness programs similar to those you find on Peloton, similar to those that are available through other subscriptions, fitness subscriptions that are out there. You can be in your home, if you have the appropriate equipment, of course, but even if you don't, you can be in your home getting fresh content every day for your workouts. You know what? I'm just going to go ahead and call it now. Apple is pointing over the left field fence with this, and it's going to be a home run. And much like anything else, subscription services, when you hear those words, think high margin. Remember we talked about that the other day. Yeah, once you make it, people just download it. And I mean, it's crazy how much money they're going to make in this. So, all right. The newest fintech unicorn is a credit card. I do not know what they're talking about there. I think that's funny. We will check that out later. All right, analyst calls of the day. Didn't see it on Micron. Did you see it up or down? Didn't see it. All right, so there's but that is one of the names we're going to look at today, and you know I'm in Micron, so we'll keep an eye out for that in some other news out there. Tapestry, I don't necessarily know how to pronounce that, but they are the parent company of Kate Spade and Coach, and they're struggling out there. So we will take a look at them on the downside as well. And because we're right, luxury names are kind of fading out there. 3M got an upgrade, and then of course Apple we've already talked about. There's our bundled subscriptions. Yeah, Kroger and CVS Health doing testing. Like it. Gaming has gotten a kind of a boost out of this. So initially, if you remember back, what was it, 2 days ago, seems like longer, that the Big Ten announced football. Okay, all the gaming stocks went down. Actually, they should be going up. Remember, if we can't go to live sports, folks that are truly all in on sports are going to sit home and gamble on their phone. Why not gamble on lacrosse? Not my thing, but I know there's folks out there that'll do it because there's a market for it. So gaming, sports, and casinos stand to gain substantially, too many S's for me this morning, on if the Russian vaccine is true, or whoever comes out with the vaccine is true. Then if Vegas opens back up, then casinos can normalize. And again, that's a lot of revenue that's out there. All right, let's scroll on down and then we will move on. Up and speeds up turnaround. So Tapestry actually is doing better than projected. So I misspoke earlier. All right, let's go on into FinViz, where we'll take a look at Qualcomm. You know, this is a favorite for me. It is the best pure 5G play out there. So if you're in it, that is why. And it's been on a tear. Now, can you turn around and buy it here? Yeah, you can. It's 5G, so it's going to scream higher. You know, the iPhone 12 will be out as kind of the first pure Apple version of the 5G plays out there. If you watch TV at all, you're getting crushed right now by AT&T's 5G, blah, blah, blah. If you're with AT, I've never met an AT&T customer that was happy, though. That's weird. But I'm Verizon, so a little bit biased there. It seems like everybody's happy in Verizon, even though you pay too much. But it works, right? So kind of like Apple. Hey, it works, so quit fighting it. And also T-Mobile and Sprint, you know they've merged, and they're going heavy into 5G. All of that benefits Qualcomm. Let the telecommunications firms duke it out. Qualcomm stands to benefit. So if you got in at 60, you're super happy. You can buy it here, just because you look at the forward PE there at 18. I mean, that's even below the market average of about 21 or so. So, all right, let's go ahead and take a look over at our board. We're going to talk about 5 individual names. We've already talked about Qualcomm. This display is Schwab Advisor Street Smart Edge. Qualcomm's upper left. We will look in the upper right at Micron, which is in the news. Again, didn't catch it as far as what's going on there. It is kind of leveled out. When you see a chart kind of do that, it's going to make a big move up or down eventually. I don't know. I think it's going to be up. I think Intel should have bought them years ago. They still have not. And at some point in time, they're going to buy them. That's my take. And then Micron will return to the glory that it was, or cease to be Micron because Intel will have bought them. But you will be paid as a shareholder for it. AMD has been kind of straight up. NVIDIA, speaking of straight up, has been the straightest of the ups, if you will. And also NVIDIA came out on Kramer was talking about them last night. Again, I don't watch real time, but I do catch the replays. He said fresh off of Apple's split that we talked about yesterday, fresh off of Tesla's split that we talked about yesterday, is there are 8 other names or 10 other names that should split out there. Amazon's above 3,000, Chipotle is above 1,000, Netflix is above 475, NVIDIA 457, albeit just kind of happened this year. It was down by around 100, 120 or so. So they should split. He put Adobe on there. Costco's at 340. They could split to make it a little more accessible. Other names, you know, Home Depot, Facebook, and Microsoft. So NVIDIA obviously is a favorite for Kramer and has been the best performer of this group. Intel, lower left, has been problematic. Some challenges there. They've been kind of lumped in with old tech, whether that's fair or not. I don't necessarily agree, but they are. So it's going to be, they've been lumped in investment-wise with that. So they're going to need something to turn things around before that stock can kind of go back and get to its glory days. They were hit pretty bad. All right, and then the lower right one there, if you want Chipmakers, Semiconductors, SMH is your best friend. There's several of these ETFs. This is the best performing, so that's the one I would say go with best of breed. Is it too high? No, probably not, right? If you buy it on today and sell it in 2030 on the same day, and 10 years from now, that's going to be a lot higher. It's chips, which go into electronics, Internet of Things. It's the wave of the future. So you are going to make money long-term in an ETF like SMH. Okay, let's leave that behind. We are going to transition now into looking at the next tab, which is going to be some long and short day trading names. You're going to see some names pop up in the chat here in a second. The first one we're going to take a look at, we're going to talk long first, FUTU. We're going to look at on the board over here. So these are Futu Holdings Limited. I don't follow this company, but they beat earnings, and 35 to 37 looks pretty good as far as a gap up, and it's been all the way up to 42, so it does have some room to run. That, again, that's not a name I necessarily follow, so probably not the one for me. The next one we'll look at is a YY. Okay, this is Joy Inc. That is previously known as, I'm blanking on the name, but it was a rename from a company that I used to be in. When you look at that up 82 all the way up to 90, that is a significant gap up. Let's see if I can bring the number out of here. 10.7% on the good news for beating earnings out there for Joy. So we'll put that down on a long. The market has been in an uptrend, so it's been painful to try to take something short. So I will give that a star for something I want to take a look at. Let's look at Apple long in the movement this morning, see how much of a gap we have there. 452 to 457, that's just a little over 1%, but pretty strong news. So when you think of trading this name, it doesn't fall under our day trading rules of 5 to 10%, looking at all that volume to be able to go in and scalp it. This is one, if you did want to day trade Apple, odds are the thing's going higher today. It's got so much momentum, and it's got this brilliant new release news story coming out. You could go Apple and just hold it throughout the day and then get back out of it using your leverage available to you in day trading to be able to make a little bit of money. So we'll take a look at Apple. Probably not going to be my day trade, but we'll take a look. PENN is PENN Gaming, PENN. That's, we talked about the gaming stocks, got the big upgrade. I think it was Goldman. That if you look at where they are, so 49 up to 53, that's going to be hard of the envelope for our numbers out there for gapping higher. So pretty good, 480,000, and the lot of momentum upwards. Does it have more room to run? I don't know. We'll take a look. SDC, never mind. Those are our four longs. We'll start getting into some shorts. Let's go SDC first, though, since I just talked about it. This is Smile Direct. They've been hit kind of hard, and I would imagine I could see them selling off pretty hard today. So continues to fall after revenue plunge, 930 down to 880. A little bit low on the volume, but I like it from the short perspective, and I like that price point. We can get in there and make a 3R on, I don't know who's buying Smile Direct on a day like today. All right, let's look at Vroom, VRM. So you've heard Lyft talk about having issues. You've heard Uber's talking about they might have to close down some operations in California. So here's Vroom dropping from 69 to 58. Smaller than expected loss, but still this is an area where things are running into trouble. So pretty significant gap down, and could fall further, right? So we will keep an eye on a Vroom short. All right, Novavax is a name that we've talked about in the vaccine space. So it is actually popping back up. So it looks like it has reversed its fall from earlier. So we can check back on it. You can see it's in a pretty heavy slide. This would be a continuation, which you know I like continuations. So with a continuation, you generally don't hop in them early. You want to watch them back up, set up for an entry, and then start to sell off again. It's generally going to be your second or third choice, but you can make some money on them out there. All right, the name we've talked about is Cisco. Again, computers, not food. 48 down to 44, so pretty significant move down. We'll keep an eye on that. I do like the name long term, so I don't like to get in short names that I like long term. but it's been all over the map. You did see there is some resistance down in that 44, 45 range. It's been down here before. So when things bounce in that area, I'm not shorting into that because there's generally, that means there's an institutional buyer out there. So we'll watch it, but don't put money behind it. Peloton, PTON. Again, this stock has run up kind of stupid for now. They have high expensive equipment, and then they have their subscription services, so they do make quite a bit of money. But it's run from what, 41 to 73-ish. It could use to sell off. This is a headlines as well as a almost negative continuation. I like Peloton short. I think there will be lots of profit taking in Peloton, so we will keep an eye on that. Okay, let's take a look at our tabs real quick. Again, looking for that 5 to 10% at 100,000. Cisco meets that to the downside, but I said I don't like the congestion, so we'll move on. Next tab. There's our YY gapping up. I like it. Apple only up 1% on the move higher. Shopify moving higher, but not much. Okay, let's move to, we're not going to, no volume on Essex there. Let's move to the decliners. See what we have. We have a couple. There's our Vroom. It's down 16%, so that's a little more than I would like. So that's a little bit against it. Again, Cisco we've talked about. Ruger, low volume. Udao, not familiar, not even going to try to interpret that in the next minute or two. All right, let's switch to the next tab. There's that Tapestry. Let's click on that since we talked about it earlier. It was gapping up 6%. Luxury names. I'm not sure I can get behind Coach and Kate Spade here. See what else meets our criteria. OneConnect FinTech. Let's click on OCFT. Maybe that's that credit card name out here. Public offering of 18 ADR. So it's a foreign company. At 18, all right, it's caught up in its congestion. There's a little excitement. I don't think there's much long there. Let's see. SeaWorld, not going to touch on low volume. All right, let's go to the last tab, and then we'll get ourselves set up. Joy, yep, heart of the envelope. PIN, yes, we've talked about PIN. Yandex, not going to decipher. All right, let's switch our board. We're going to get set up for the trading portion. And on the left, we're going to have this again is TD Ameritrade. ThinkPipes is our screen that we're going with. So let's take a look at, we'll go 2 longs and a short. We will go YY in the left screen, PIN, P-E-N-N in the middle screen, and then let's look at, we'll watch Smile Direct out of the gate, and these are kind of in order of my favorites too. Sorry, it's just SDC for Smile Direct. A little bit low on volume, so we'll have to wait for that anyway. And then we'll keep Peloton kind of in our hip pocket, if you will. As far as entry points and stops, YY has kind of settled out, so I do expect that once it opens. Again, this is a long. Again, it is already up, I think, around 10%, but you're going to probably need a dollar stop, if not a little bit more. I like the congestions between 50 cents for the past, 2.5 hours. It's only moved 50 cents of a range, so that should allow us to get in there with a nice stop. I'm going to take that sooner than later because when the volume opens, I think that's when it's going to make the move. So have your ticker symbols ready, get ready to go for a quick entry on YY. PIN, we will wait and see. It's already moved up, a pretty big move in the last half an hour. And then as far as Smile Direct, if it falls off the planet, we're just going to say we missed it. But if it comes back up to around that 890 point, when we can catch it lower, then I like that from there. All right, here we go. We have 30 seconds till the market open. For today's plays of the day, you're going to see 4 screens on ThinkPipes. On the far left, we have the SPY, so we can watch the overall market trend as it opens. And then on a 1-minute chart, I'll refer to the other 3 panels as left, middle, and right. On the left panel, we have YY gapping up. In the middle panel, we have PIN gapping up. And then on the right panel, we have SDC, which would be a short. Again, my primary is to look at YY However, if the going long, however, if the market starts to sell off hard, we'll switch to SDC. There's your opening bell. Let's take a look at YY. Oh, I like that. I like that sell-off. Let's put our entry at 90.50 for YY. Get set up. And again, it has to go back up north to hit that. There we go. We're in it at 90.50. We market it in. We're going to use a 55-cent stop. I want to go down to 89.95 for that stop. So there's our stop right there going in at the bottom. Again, we're taking this long. And we'll give you an arrow so you make sure you are on board. And we're taking that. So 90.50, and then we need a $1.55. So if we go up to, let's call it a $1.50. Are we there yet? I'm looking at 91.50. So yeah, I didn't have the stop in, so we're still in it. Let's put 91.60 as our 3R, and we will get out at 91. Nope, I'm getting waved off here. So 55-cent stop. So okay, yeah, that'd be 2R points. So yep. So that's about a 2R move up. So the stop would be, why can't I do math? Let's put it up at 92 would be our 3R. 92.10, 92.15. There we go. So that's what we're looking for. That's our 3R. We'll clarify all my talk there for you. Got excited for a second because I did think it almost went up and hit it. So there it's bouncing all around. Remember, if it hits that lower stop, we got to be out. There, we're back out. So we're back out of a YY, and we are not going to come back to that one. All right. Pin did sell off kind of hard. See if it's got some an entry here to the upside. We're going to wait on that a little bit. I could see people not being as excited to get in a gambling stock. It already fell down. Let's see, 90 cents or so. All right, let's let that go. Don't like the way it's setting up. The market's going back higher. So looking over at SDC, it already went. We missed it, so not going to get into it there. Let's look in the right. Let's put up Peloton. Again, this is a short based off of Apple. It's already basically moved all the way back up. It jumped from 62 to 63 just a couple minutes before pre-market, and then it went all the way up to 64. Can't really short into that. The other short I had was Vroom, VRM. All right, down 21%, already sold off a little bit. It's got those dojis down at the bottom. That's usually a sign that it's bottoming and going to go back higher, so not really interested in shorting there as well. Is the overall market here kind of pretty well flat across the board, so I think we're probably done looking at trades. Let's put SDC up in there again. Again, this would have been, looks like the best short, but you would have had been in it quick. Again, that's only 50 cents, but with the 10-cent stop or so, that would have worked had we gotten on it right away. All right, PIN is not working long, YY is not working long. Let's look at some other long names, FUTU in either of those panes. That did not, well, 36, nope, not even if you got in it right away, you wouldn't be 3Rs. You see how fast the math can move for you, so my brain wasn't quite ready on YY. All right, and let's see. The other ones we're going to take a look at long. That's actually it for longs. Let's look at NVAX short, but it actually flipped long, NVAX. See what it's going on with it. So actually, yeah, so it started short this morning and then flipped kind of long. That's a continuation. So getting a lot of strength there, so you would not want to get in the way of that. And did we look at Cisco? We'll check it again. That was Cisco short. Oh, look at Cisco. That's actually kind of a pretty chart. So let's zoom in there just a touch. So 43.80 all the way down to 42.50 divided by 3. I could almost get a 3-hour trade out there, a 30 or 40 cent stop. That'd have been tough to take out of the get-go. So those who took it would obviously be rewarded. But Cisco now selling off more than 11%. Smile Direct Club. Yep, I made the comment, who's buying that today? And it appears nobody is buying that today. It continues to fall off the cliff there. All right, see if I have any other names to look at. The EV names have been on fire, so in that left pane there, we'll actually leave Cisco. We'll go with Penn Gaming in the middle. So in the middle pane, let's look at Tesla. While I look at that, we're going to bring up another screen over here to the main layout, kind of see what's in play on some other names. Micron down 3%. Don't need to pull it up though. Let's look at some other. So Tesla's still up 3% despite this flopping around. Again, it went up almost 13% yesterday. I don't think it can maintain here, but that doesn't mean it's going to turn around and sell off anytime soon. But with the split coming up, I think a lot of people will probably wait till after the split. Both people are saying the same thing with both Apple and Tesla, is wait till after the split and then start peeling off some shares. All right, let's look at Blink, which is one of our power companies, BLNK. It's been up for the past couple of days after selling off hard. So it's coming in. Let's look at Plug, which is a different version of the same thing. Plug's up nicely. Let's check out Workhorse, the truck maker, WKHS. About average there. And let's check out Shell, another truck maker there. Not moving a whole lot. All right. And yeah, NKLA, thank you. That was escaping me. So it's getting a lot of momentum. Again, some good news out there. It's all rhetoric, though. They don't have the numbers to back it up. So we'll see. That can take things higher, though. Overall, again, the market is kind of mixed with the NASDAQ up and the Dow and SPY down. But let's go ahead and switch to chart. We'll take a look at the book. All right, those are options at the top. DraftKings up 4%. I like that. LCA is also another gambling name. That's our special purpose acquisition. Is going to become GNOG. I think that there's no announcement on when it's going to happen, but LCA has been on the move up. So I think it's probably happening sooner than later. Tesla, Nikola, Shopify has been on fire. I'm trying to get an entry point for those that are asking. I can't. I mean, I just can't. It's too on fire. Pull the Shopify chart if you would here. We're on a 5-day. That's fine. So again, here it came in. It's going back higher. It's still, if you go to a longer chart, it's kind of ridiculous. So tough to put tough to get an entry point on Shopify out there. All right, let's take a look at what's in the red today. Mineral, that's a local Austin company, getting hit pretty hard. 10 cents down, Clickstream off a little bit, and some smaller names. Lebanon Citizens National Bank up there. You know who I don't see in the red? Yeah, I do. There it is. LKNCY. Luckin's a little bit in the red today. So kind of flat. Maybe today's going to be that kind of sideways day that we haven't had in a while. So we shall see. All right, let's go ahead and bring it over to our trades. We'll leave the trades up while we talk about the question of the day. But let me close out the chat first. Not very talkative this morning, everybody. So remember, it is your forum. So hop in and throw stuff out there so we can discuss. And then nothing in the Q&A for today. So, all right. So today's question of the day is, should I or should you refinance your house? So when you're going to refinance your house, the number one thing you need to think about is your current interest rate. That is the deciding factor of what you're going to do with, should you refi or not. So if you are, as a guideline, if you are sitting at a 4% or higher rate on your mortgage, then yes, generally you want to refi because rates are at an all-time low right now. So are they going to go lower? Probably not. They're going to bounce around the lows. They were here in 2013. They were here coming out of the global financial crisis back in 2007, 2009. So you've had several times to be able to hop in there. So if you're in a fixed mortgage, 4% is kind of the magic number. If you're above that, refinance. If you're below that, then you can think about sticking with what you have. Another reason to refinance is if you are replacing an ARM. An ARM stands for an adjustable rate mortgage. So if you bought a house and you went with a 5-1 ARM, so your first 5 years are at a fixed rate and then it adjusts, well, even if it adjusts right now, it's going to adjust low. But if you are worried, because rates are low, but if you are worried about a rise in inflation, then you may want to lock in that lower rate, right? And there are lots of inflation talk out there. I'm not really that worried about inflation yet, but I can't tell you for sure that it is not going to take place. So if you have an ARM, consider not just because of to lock in a rate, but to, in case inflation rears its ugly head. And if you're in a good mortgage rate, i.e. 4% or below, and inflation goes up, you then basically your house is making money for you because it doesn't cost very much. So that's the second reason. Now, you also might want to change your terms. So if you are in say a 30-year mortgage fixed, and you've been paying your house down for say 5 to 7 years or so, and you want to extend that mortgage, then for another 30 years and lower your payment around 100, 150 bucks maybe, you can refi for the purposes of extending. So say you're at a 3.5% rate and you're getting an offer for a 3.125% rate on a 30-year fixed. Well, just the change in rate alone is generally not enough. You want kind of a full percent to make it worthwhile because there are costs that go into these loans. However, where you can gain is you're taking what's a 23-year term remaining and now kicking the remaining capital at the mortgage out to 30 years again. And again, that's going to lower your payment and you get a little bit of a break on the interest rate. So that is another reason to do that. However, there are some folks out there I know that are anxious to pay off your house. So let's talk about that. If you are trying to pay off your mortgage so you're free and clear, I do have to say, remember that your house payment consists of 4 things. It's PITI is how those of us in the financial world remember it because we have to take tests on it. So PITI, you have principal. Out of each house payment, you have principal and interest. Then you have taxes and you have insurance. So when you pay off your house, or I know we're talking refis, if you refi a 30-year down to a 15 and then because you're trying to pay it off early. Well, whenever you hit that fence and whenever you write that last check to your mortgage company and you say, haha, my mortgage is dead, I'm out of debt, don't forget that out of that payment of the PIT&I, only the principal and interest goes away. The taxes and insurance continue. And if you're using an escrow function as part of your mortgage, which I think you should, it's a personal choice, and generally it's done for you. Remember, the taxes and insurance are paid for you on basically you escrow in money and then they take care of the lump sum bill. If you pay a house off, which I have, then at that point, don't forget that you now have to come in and actually pay your taxes directly to the state. And you have to go in and pay your insurance to your insurance company. Generally, the insurance company, you pay twice a year. So at least you get a heads up every 6 months and you get to split that up. But if you're not used to writing big checks, you can be surprised, especially here in Texas, with the property tax that you only get billed for once a year. Remember that escrow function kind of makes it to where you don't have to think about it. But yeah, you could hit your tax season and here's a bill for $15,000 that's due in 30 days. Now, if you're in a position to wolf that down, no problemo, good for you. If 15K is not something that you're planning on writing a check for anytime soon, then that can be an issue. So don't forget there's other functions that are going into a mortgage that help you. Another function of a mortgage. So if you are going into, say, buying a house, and if you're in a position to pay cash for it, say maybe you have use the wealth building function of mortgages, which is what I'm talking about is the other function there, is when you take out a mortgage, say as a person or a couple in their 20s, and you take it out for 30 years, well, that monthly function of you having to pay your mortgage payment now also in turns functions as a disciplined savings function, because you are building equity in your home with, of those four, excuse me, P, I, T, and I. The P is money you are basically paying yourself. You're taking it out of checking and you're putting it into home equity. That's good. And really what it costs you to live there, if you're comparing a buy versus rent decision, you don't really need to count that principal because you're paying it to yourself. But the ITI is the other portion of what it's really costing you to live in that home. But if you start in your 20s or 30s with your first home, good for you. You have this disciplined savings program. And then when you move homes, it is a decent idea for wealth building to take the home equity that you have built in your first home. You build that through two functions. A, you're paying in this monthly payment towards principal, and B, generally property appreciates over time. Notice I said property, not the house. The property does, because that's what's appreciating. The house is actually a depreciating asset you have to put money into. But between that function of you paying money in towards your principal and the house appreciating, when you sell that house, you will likely have a portion of home equity, which you can now carry forward to your next home. If you continue to do that, and you move, say, once a decade or whatever it turns out to be, by the time you are in your 60s or 70s, you can actually likely pay cash for your final house. Generally, there's a downsizing move there, and generally that's enough to pay cash. And the question is, should you? Well, I was raised, and the generations before me were all raised that if you take a mortgage only to get into a house, and then pay it off, pay extra payments, try to get that thing paid off to zero. So that's a big gorilla off your back, and you are now debt free when you finally pay it off. And that's true. But if you are an investor in the past 15 years, you've noticed that, yeah, money is really cheap. We are not talking about my first mortgage, which was a 7% note. And I thought that was pretty good. I walked away from that happy that I could get into my first house at 7%. That would be gasping now to pay 7% on an interest rate. So times have changed. So I would recommend that you change with it. You no longer need to pay down that. So what you might do, especially if you're going into retirement with less than the total net worth that maybe you wanted, a lot of people say $1 million, depending on how much you spend in life. $1 million may be a lot of money, or maybe not nearly enough money, depending on your lifestyle. But instead of putting all that money into your home where you can't access it without going back to the bank and doing a home equity loan or a cash out refi or any of those sorts of things, why not keep that money separate and invest it either passively or aggressively? It depends on your type of investing. But if you can get a 3% mortgage, take the 3% mortgage, even if you're 80 years old and might never pay that off. Take that and then let your money grow elsewhere. So you're really having to do a lot more complex math than back in the day when you just take a mortgage to get into a house, and then once you pay it off, just never deal with a mortgage again. It is very cheap money that's out there, and you will see this in spades if we do have a run on inflation in the future. So what you're really talking about there, and I will conclude with this, is if your money can grow at 10 to 12% elsewhere, which is the traditional numbers in the market, and I'm not saying the next 3 months, I'm a little cautious going into the election, but if your money can grow at 10 to 12% over the long term, why would you lock your money up into an asset that you could have just paid 2.75 or 3% on it? So why would you do that? And with the comment I made the other day to a good friend of mine, and she kind of is faced with the same sort of math problem. And I said, well, you can put more money into your house. All you're doing is delaying yourself, becoming a millionaire. You're just delaying that. So you can work longer, work harder, because it's going to take you longer to get your financial goal because you want to put a lot of money into the house. So what I didn't put into the appropriate words there is a lot of people say, well, I don't like debt. And I say, okay, fair enough. What do you think of leverage? And they're like, well, leverage sounds pretty good. And I'm like, well, you bought the house on leverage. So let's just talk about, I don't like debt for a second, but I do like leverage, because when you showed up that day to buy that house, if you don't have cash for it, well, then you can't afford it. That's kind of the ugly financial world for saying, well, you need a loan to get into a house. So you used leverage to get into the house. Which, was that a brilliant move for you? Yes, it got you into a home. It got you on this, wealth building schedule of, paying down your principal and a property that appreciates over time. So you use leverage to get your foot in the door, and then you are in a hurry to pay it off because it's debt. Leverage and debt are the same thing. It's how you use it and the interest rate that you're getting. So to tie it back to what I was saying earlier is, it depends on the interest rate. If somebody's going to give you money to start a business, to buy a house, to do whatever at 2 to 3%, or a car loan at 0%, sure, why not take that? Because if your money is working elsewhere properly, that is a very smart financial move. So these things can be kind of confusing. Do some self-study, read up on this, talk to some folks, give me a call if you have any questions on it. But before you lock yourself into a 15 or 30-year contract, there are some really things you need to have straight in your brain, so you make sure that you are understanding exactly what you're doing. If you still want to do it, that's fine. If you want to pay your house off because that's a goal, then I applaud you for meeting one of your goals. But there are some other things to think about out there. So that's all we have for today's show. Please reach out to me through ototnow.com with any questions or comments. Thanks again for joining me, and here's you fighting the good fight every day to be on time, on target with your financial goals. Bye.